All right, everybody, welcome back to Matt Money. Little late night Matty Moolah action, talking about Palantir. What a great day. It's been a minute. Been a lot preoccupied with Rocket Lab, with the interview, and a lot of things like that. So appreciate you guys' patience. But hopefully you guys have been getting my tune in what I feel about what's going on with Palantir over in Palantir Weekly. So I've generally consistently been over there on Amit's channel. So hopefully I haven't left you guys out and dry associated with that. With respect to what's going on, man, in the actual portfolio world of Palantir, so we're looking pretty happy. Have yet to sell any of these shares, but what I do want to look at briefly here is just pull up a chart here from Robinhood about where we're at for the stock price. We are up over 125%. For the past year to date, we are up 91%. So we're doing really well. Excited about this one. I added a little bit. I don't know where it was, April-ish time frame. Added another 500 shares, got me up to 4,500 shares. And so I just wanted to check in with you guys, man. What am I seeing is going on as we dipped, from the $29 range down to the low to mid 20s here in August during the Japan carry trade things that were going on, back to obviously after earnings, and now getting to the $32 range. What do I think is going to happen here, and where do I think we're going to go forward? And for those of you guys that are interested, I generally speaking will be typing up an article with respect to being on Seeking Alpha for Palantir. Apologies, I'm talking nonsense here. It's a little late. My time, I need to hit the sack. I need to be up at like 4:30. But regardless, I just wanted to talk about $32, where I think we're at. And just bluntly, before I get into the investor presentation, there's a million different ways you can interpret this investor presentation, but I think we're just in price discovery mode. I think you have a company that over the past trailing couple quarters was really in a place where, if I could find it, year-over-year growth wasn't the best. And now we're getting back to, I don't know if I necessarily know it's within here, but year-over-year growth wasn't necessarily the best. You were kind of dragging. You can kind of see over the past 2 years, we actually slowed down in terms of actual revenue growth down to almost the single digits. It got so poor. And now we're starting to get back up to the point where we're raising back up to where we were, which now a lot of this is being drug up by commercial growth, mostly in the U.S., 55% year over year compared to last year. But if you think about it overall, 27% in terms of year-over-year revenue growth. I think the reason why you're starting to see this price discovery mode is, I'd say, a multitude of things, right? We're continuing to deliver on net income margin, cash flow margin, and that persistence, I think, is really starting to hit people the right way. They're seeing that even if it might be slower to get to revenue, that you're going to get the cash flow, that you're going to be at a high margin. Sometimes, or even if you're looking at it, some of the best margins within the SaaS business, or even just software as a whole, within the United States Stock Exchange. So I think people are starting to see, wow, I mean, if these guys can grow to $8-10 billion in terms of revenue, we're still going to be generating a crap ton of money back to the bottom line. Another thing, which I know was small, but I think was a big win, and then I think we'll get to the probably the third most obvious and most likely the reason why the drive was so big, is the second being buybacks. It was small, but I think that it goes to show, even though it was only 10% of cash flow, I think it's reasonable. I think that if you continue to scale that over time, you get to a place where you completely offset the current share-based compensation, which is running at about $450 million a year, which is a little bit under a couple percent of dilution per year comparatively to where we were, a couple years back. Big improvement. So if you're able to kind of buy back stock as your revenue continues to increase, your net income margins are continuing to do really well, you're going to be able to get to a place where we're no longer dilutive. And I know that's a big problem for a lot of people, that, they didn't want to get invested in a company that was continuing to dilute. They want to look at something that is continuing to reduce the float. So I think that hits on two fronts. You have people that would never touch the stock at all because of that dilutive nature. And then you have people that are really into buybacks. So even though it's a small margin of people that are really into buybacks, that perks people's ears up, right? And it means that investing in Palantir is on the table. So it might be a couple percentage points of retail investors, but when you're thinking about a company that's trading at a balance in mid $20 range, and now you open up the gate to another 4 or 5% of retail investors, that's going to drive the company up a couple percentage points in terms of demand for the stock, right? And not all these 4 or 5% people, and I'm making these numbers up, people that are really interested in share buybacks are going to buy it. But you just need a fraction of those people to be interested and hear this company's issuing buybacks. That's the first buyback they're doing. How long are they going to consistently do this? Is this a one and done? Are they going to continue to do buybacks? How's their revenue? Is it growing? And so that leads me into the third thing, which I think is the most important and reason why we're starting to see this new price discovery of $32 on the stock. And I would say that it's the year-over-year revenue growth of 27%. Now, I want to give a shout out to Amir, who did a good job outlining, the year-over-year comparison comparatively to where we were last year is really abysmal. Going from Q1 of last year in 23 to Q2 of 23, there was barely any uplift. In fact, it was almost flat in terms of revenue growth. And so comparing year-over-year, from Q2 of 2023, that might be somewhat of a slam dunk, some might say. I mean, you might just have to perform at a normal pace and show up with the 20% year over year. But I think the number 27 is something that I think is going to perk a lot of people's ears up to lead to this price discovery in the low $30 range for the stock. And the reason being is I think people are getting accustomed to maybe we'll get back to 20% year over year revenue growth. Once we got to the mid teens and we're looking like we were continuing to trend downwards up until about a year ago. And then AIP comes out and we're starting to reverse and buck the trend, going slowly back to 20%. Then we were in the low 20s. Now we're back at 27%. So I think that price discovery here is folks starting to trickle back into the stock thinking, are we going to get back to 30% plus sort of year over year revenue growth? And even if not, then you have people that are like, well, we're at least back into the mid 20s revenue growth. That's positive, right? I mean, that allows you to at least stomach some of the high valuation of the stock right now. I mean, you're looking at a market cap of $72 billion at the moment. So if you're thinking about it in that perspective, the company's only going to make, $2.75 billion in revenue for the year. So, I mean, it's pretty expansive on a price to sales basis and any other basis that you can kind of think of. But if you're going to continue to grow into a 30% year over year sort of revenue growth, and with additional softwares coming out, Warp Speed and many other things continue to come out every 6 months or so, then you're looking at a company that's continuing to deliver, continuing to grow at a rapid pace. And so people might be more willing to invest because there's not a lot of companies out like Palantir on the market. If you think about it, people are starting to recognize Databricks isn't that kind of company. Snowflake's not that kind of company. Palantir is really the company, even though that a lot of people are kind of poo-pooing it and saying, it's not that impressive. They don't necessarily have too much AI. They're not building robots like Tesla, etc. The list goes on. These guys are the real deal. Their Foundry platform has done wonders for a lot of companies out there. AIP cons have demonstrated that. They're running 20% of healthcare beds now in the United States and continuing to grow in terms of Europe with the NHS deal that was announced over the past 6 months to a year. So I think when you think about this, people are starting to see brick by brick the foundation that this company is building in terms of the longevity that it might have as a legitimate operating system for the modern enterprise or decision maker for the modern enterprise, whatever sort of lens you want to look at it, software deployment for the modern enterprise or manufacturing for the modern enterprise, or the operating system for modern manufacturing, however you want to define Warp Speed. So people are sitting there being like, could we get to 35%? I mean, that's not off the table. Am I thinking that? I'm going to take it one quarter at a time. I wouldn't be surprised if we see 25% year over year growth next quarter. And that might jostle some feathers because, here we were just at 27%. And now we're pulling back to 25. But I think that this allows people to dive a little bit more confidently in the stock and at least find some sort of price discovery. Do I think we're going to stay here at $32? We're going to end the year at 32. No, I'm still trying to weather whether or not I'm thinking we're going to stay above 30. And I'll get into that when I write my Seeking Alpha article in the coming days. But, I definitely think we're at a price discovery point. I think we're topping out. Could we hit 30, 33.50 temporarily, especially on a hot market day? What goes on in Jackson Hole this week, rate cuts, etc., might provide a lot of push to medium cap companies like Palantir going forward. I wouldn't be surprised. But I think the trading range, at least from what I'm talking about, and I think Roy agreed with me when we chatted on Palantir Weekly, it could trade anywhere between 27.50 and 32.50. I feel like you might come out of that range briefly, but I think within the next couple quarters, that's where I'm at right now, unless something changes drastically for the better or the worse. To give everyone some context, I left last year, the full year 2023 with a prediction that we would probably end the year 2024 at about a $25 price target, knowing that we'd be going around $22.50 to $27.50. And that was under the guise that we'd be in high teens, low 20% year-over-year revenue growth. Obviously, I've kind of now have put my foot in my mouth, acknowledging now that we're at 27% in the third, going into the third quarter here. So, if that persists, I can continue to see that I might bump my price target to 30, but I'm still trying to sit and understand, is 27% or plus, going to 30% reasonable? And I think that if you go back to the mid 20s, it doesn't necessarily warrant a $32.50 current price target. I think this is price discovery, and I feel like you'll pull back into the high 20s, mid 20s. And your range will probably be range bound and, might drip down to 25, but it'll probably come back to that 27.5. So I don't know. I'm still trying to feel it out. You guys will have that article in your hands in a couple days, but I wanted to give some feedback and independent sort of looks. I was excited to see the shares that they had bought. They bought at a reasonable price too. I think it was like $21 or $22 a share. For the shares that they bought back. So it's good to see, and I hope they persist. I think 10% of cash flow is reasonable, especially right now. But, you have $4 billion on the balance sheet. What else are you going to do with it other than potentially buy back stock? So they don't necessarily have a high capital intensive business. So unless they start putting investments into SPAC companies like they have in the past, or maybe FedRAMP companies that they're looking to kind of help support and grow, I don't necessarily understand what they're going to do with that $4 billion in balance sheet, other than just maybe capture more cash flow from interest. I'm not 100% certain, but curious to hear what you guys think about the stock. I really appreciate everybody chiming in on Palantir Weekly, giving me the support. And appreciate everybody looking at the Twitter as well, or X, some of you guys might call it, almost at 10K there as well. So I really appreciate everybody continuing to support. And this will be fun, and for those of you guys wondering, am I going to sell any? I don't necessarily think warranting a sale here at 32.50 is, I'm okay. Losing some money in the short term, if you look at it that way. I do write covered calls on the stock, and so I haven't had any shares called away yet, but we've had some close calls over the past quarter or so with the real run up that we've seen from the low 20s to now the low 30s, but I've been fortunate to be able to hold on to all of it. With that said, I'll continue to write my covered calls to what I think is reasonable, hopefully getting them rolled into the mid 30s here over the coming months. I'm just at $31, so it's not like I'm hemorrhaging too much cash. On those, worst case scenario, they get called away at 31. I write some cash secured puts to get back into my portfolio at 4,500 shares. What else is there, man? I mean, I anticipate this being a true couple $100 billion stock. And I think that that's another reason for the price discovery. People are starting to recognize that it's not some sort of company you can toss by the wayside. They're here to stay. They're here to build and legitimately be here for decades to come. And I think people are starting to recognize that, although not right now, they have the capability in 20 years' time to be competing with the big boys, especially if they're continuing to operate and dive deep. I think people fail to recognize that they're really only 6 years in to their commercial journey. While they're a 23-year-old company, they've really only been focused on commercial operations over the past 6 years. And so to be able to grow pretty expansively, as you're kind of seeing 50% year-over-year growth from a commercial standpoint, very impressive. So looking forward to see what the company has in store in the future. And I know that they'll continue to grow the ever necessary government business as well. So very interesting to see. Really curious to see as well how net dollar retention continues to do well. We've seen that come up over the past few quarters, but also you're seeing the commercial count of customers grow way faster than the revenue. So I'm curious to see if the growth in customers will eventually lead to a continued increase in U.S. commercial revenue growth as well. So other than that, continuing to do really well. Really excited to see if there's going to be any additional adjustments to the revenue. I was forecasting 2.75 billion. I mean, for fiscal year 24. So it looks like we're at least in halfway through the year. We're on track to do that. I wouldn't be surprised if we get to 2.8, but I have yet to really kind of do my due diligence and run through all the numbers to be able to predict something like that. But yeah, I could easily see us getting to $4.5 billion in the next 2 years. And with that, you're going to be making $1.5 billion in terms of income. And who the hell knows what you're going to do with all of that money, because we're not buying back much stock yet, and we're not really reinvesting it back into the business. So curious what avenues Palantir can do to have us going forward. But anyway, nice 17-minute video for you guys. Hopefully that was interesting to listen to. Where I'm at, price discovery mode, man, $32. I'm curious to see where we're at in the next couple quarters. But I'll see you guys on Palantir Weekly this upcoming Friday, and we'll love to answer any questions you guys have down below. Thank you guys so much for the continued support. Love you guys all so much, and it's been fun. The past couple weeks really remind me why I do YouTube. You guys have really helped me get my love and joy back for it. So really excited to be able to provide my thoughts going forward. Love you guys. Talk to you guys soon. Cheers.